Welcome all of you. Welcome all of you first of all for this new academic year. Wish you all a very happy academic year. Welcome all of you in my online lectures. First of all, I congratulate all of you for selecting the commerce stream. See, you have lots of good avenues in the future. See, if you have selected the 12th commerce, then what you can opt for after completing the 12th commerce? There are many fields which will give you good prospectus life. See, which are these fields? It can be CA, that is Chartered Accountant, CS, Company Secretary, CWA, Cost and Works Accountant, CFA, that is Certified Finance Analyst, CFP, that is Certified Financial Planner, CIB, that is Certified Investment Banker, CSB, Certified Stockbroker, CIA, Certified Investment Analyst, CAI, Certified Actuary in Insurance, BFA, that is Bachelor in Financial Accounting, BBA, Bachelor in Business Administration, BSc, that is BSc, that is Bachelor in Finance, BMS, that is Bachelor in Management Studies, BSc can be Bachelor in Economics also, or the plain BCom or professional BCom, and many more are there. See, in these days, all of us are learning that the GDP has gone down of India, right? And we have to fight China. Now, what should be done? See, our economy must be strengthened, and our accountancy should be with our financial side should be very strong. So, who are the pillars of the future India? It is you only. You people. You people are going to be the future of the strong India, which will fight each and every enemy. Okay, so wish you all the best. You are learning bookkeeping and accountancy standard 12. See, this is the first page of your book, bookkeeping and accountancy, and this is the last page of your book. And what is our voyage? What is our travel? To start from the first page of the book to the last page of the book. And I'm assuring you that your journey will be very happy and it will be very fruitful for you. We are learning bookkeeping and accountancy standard 11 of Maharashtra Board, HSC Board. Now see, which chapters are there in your book? What is the index of your book? See, there are total 11 chapters in your book. Okay, and the first chapter is Introduction to Bookkeeping and Accountancy. Okay, and now we are starting with the first lesson, first chapter. Now see, Maharashtra Board has given some competency statements. Okay, for some competency statements for standard 11 student. What is meant by competency statement? That Maharashtra Board expects that the students, after learning this lesson, unit number 1, and after covering these topics, must be able or must be competent to understand these many things. Okay, see, which are these things? After learning the first lesson, which is the first lesson? Introduction to bookkeeping and accountancy. The student should be competent or able to what? See, the students understand the meaning, features and importance of accounting. Students understand basic accounting concepts and terminologies. Students can analyze the role and benefits of bookkeeping, and students will be able to know the latest accounting standards. So these are the competency statements stated by the Maharashtra Board. I hope and I wish that you be able to do all the things. Now, let's start with the good note. Good thing. See, this is what? This is the 25% reduction in your syllabus. See, this is the praise note, and this praise note is reflecting the happiness in your mind, right? See, what is this praise note regarding? See, as this year is stuck with the fear of coronavirus, right? All of us are known that we are stuck due to lockdown. Now, only because of this, only for this academic year 2021, due to the effect of COVID-19, government has declared 25% reduction in your syllabus. See, as per this press note, as it is declared by Maharashtra Board, HSC Board, it is in Marathi. Then also I have done the required changes for you in English. See, this 25% reduction is there in your syllabus. Up to this. Now, what is this 25% reduction? Has the book been changed with reflecting to the syllabus? No. Book has marked some portions or some topics which are considered to be self-study. What is meant by self-study? As it is reduction, that much of part will not be evaluated. Marks will not be given. Students are expected to learn by themselves. Okay, that is non-evaluative portion for the academic year 2020 and 20 only. Okay, so you are lucky enough. Now, with this 25% reduction, let's see what has been reduced from lesson number 1. See, this is your chapter number 1. Standard 11th Commerce, Bookkeeping and Accountancy for the academic year 2021. First lesson, Introduction to Bookkeeping and Accountancy, lesson number 1. See, what has been reduced from the pages number 9, 14 and 16, which comes under the category of students activity. And why they has been reduced? Because those are considered to be extra work. Okay, those students activity has been considered as extra work, so those has been reduced from your syllabus. Okay, see, now I have marked wherever it is in your book. See, as per this, and there are some patterns, changes in the patterns of the questions. Okay, some objectives would be given to you. You have to select any of these types of questions. Okay, any of the types of topic for examining your paper. Whenever we come across such things, I will always keep on noting it to you. See, now let's start with your first lesson, that is Introduction to Bookkeeping and Accountancy. See, Introduction to Bookkeeping and Accountancy. And what are the contents of this lesson? Meaning, definition and objectives, importance of bookkeeping, difference between bookkeeping and accountancy, meaning and definition of accountancy, basis of accounting system. Basis, what is the base of accounting system? Qualitative characteristics of accounting information, basic accounting terminologies, accounting concepts, conventions and principles, and accounting standards. Which standards? AAS and IFRS. Okay, so these standards you are going to learn in this lesson number 1, that is Introduction to Bookkeeping and Accountancy. Don't worry, because I am going to explain you in detail about every topic, about every content, about every subtopic. Okay, so you don't have to worry about it. Now let's start. See, introduction. First of all, what is meant by bookkeeping? See, bookkeeping is related with recording of business transactions. Business enterprise and other organizations deal in activities which involve exchange of money or money's worth. All these activities are recorded for the purpose of taking important decisions as to whether the activities are feasible, profitable, and are to be continued or not. Information about the business and other organizations is required not only by the proprietors and managers of business and other organizations, but also to various other stakeholders such as government, investors, customers, employees, and researchers, etc. Okay, I will explain you. What is meant by bookkeeping? See, the meaning is hidden in the word itself. Keeping means keeping the recording. Okay, keep the record in the books. That is called as bookkeeping. Keeping the record in the book. But which records are kept in the book? Of the business transactions. Okay, whatever are the records relating to the business transactions are kept in the book. And how they are kept? Kept means managed or written. Okay, written. That is called as bookkeeping. Which business transactions? See, what is meant by business transactions first of all, because this is your first time you are entering the commerce field or you are entering in the accounts field. See, what is meant by business transaction? Every business enterprise, what is meant by enterprise? Business firm, or simply you can call it as a business. Every business and other organizations deal in activities which involve exchange of money or money's worth. Means what? See, for carrying out any business, money is involved. We can buy by giving the money, we can sell and we can get the money. For every business activities or for every transaction, See, what may it be the business or our day-to-day activities. If you want to buy the book, what you have to do? You have to pay the money to the shopkeeper. And for the shopkeeper, as he is a businessman, he will get the money after selling the book. So what is the most important factor? Money is involved. See, money is involved. So what is meant by transactions? All the businesses and other organizations deal in activities. Such activities are dealt with in which it involves exchange of money. See, money is exchanged or money is worth. What is meant by money is worth? Something which is the value of the money, which was there in earlier times, at the times of barter system. Okay, with the at the worth of money we used to exchange the things. But here, these days, every transaction involves exchange of monies only. All these activities are recorded. What is the first purpose of bookkeeping? Recording all these activities. For what? For the purpose of taking important decisions. As to which important decisions should be taken after looking at those recordings, about as to whether the activities are feasible, whatever is done by that business, whatever activities are done by the business, are those feasible, are those activities profitable, means is the company or the organization going to get the profit in future, and if it is going to get the profit in future, should the activities be continued or not. Or see, for example, whatever you are doing in the business these days, if that is not giving you the profit and will not, there are no chances that you will get the profit in future, then you may not continue of doing this such business. So depend upon what we can take such decision. See, for that all the activities should be recorded. Okay, and this work is called as bookkeeping. Okay, all the activities are recorded, but which activities? In which money is involved. Okay, in which money is involved. All the money, that is called as monetary transactions. The activities of the business in which money is involved for exchange of everything are called as monetary activities, and that is called as transactions. Okay, so this is the new word in your life, transaction, with related to the monetary activities. Okay, those monetary activities you have to record, that is called as bookkeeping. And why they should be recorded? Because after analyzing all the monetary activities of all the transactions, you can take the proper decisions. Okay, whether those activities are profitable, those should be continued or not. Then information about the business and other organizations is required not only by the proprietors and managers of the business and organizations, but also to various stakeholders such as government, investors, customers, employees, and researchers. See, one more new term has arrived in your life, that is stakeholder. Okay, see, note properly, it is stakeholder, not the shareholder. Okay, stakeholder. What is meant by stake? What is meant by stake? Stake means portion. Okay. See, whatever activity every business is carrying on, what do you think? Whom it would be affecting? Only to the businessman? Only to the organization? No. Whatever activities a business is going with, a business is carrying with, it affects all the portions of the society. That is called as stakeholder. Whatever activities has been carried out by every business affects all the portions of the society, that all the different stakeholders. See, for example, when you go to buy the book in the bookshop, who are you? You are a customer, right? See, a single transaction, a single monetary exchange, that buying a book from the bookshop. See, you are a customer, then somebody, some employee or some worker from the bookshop gives you the book. So who is he? He is an employee. See, he again the same, again another stakeholder, okay, of the society. Who is he? Employee, which is related to your buying of the book. Then investors. See, investors means the people who has invested in that business, maybe that bookshop. We are taking the smaller example to understand the concept. Who are the investors? The people who has invested their money in that bookshop. Okay, those are called as investors. Then government. See, because the bookshop owner has to pay the taxes to the government, right? He has to show the all clear details or the real details of all the bills to the government. So with a single transaction that you went to buy a book from a bookshop, it affected how many stakeholders of the society? How many people are affected? Those are called as stakeholders. How many people are affected? Government also. In the large scale, if you think that government is also affected with a single transaction, investors are also affected, customers, that is your customer obviously, employees and researchers. Okay, so researchers means who? The people who are dealing in detail or learning in detail about all the things, all the monetary transactions, okay, or all in detail about the accountancy and finance. Those are called as the researchers. See, etc. There are many stakeholders actually which gets affected with your single transaction. So all these people has to think and take the proper decision. And when they will be able to take the proper decision? If you have maintained the book properly. Or if you have maintained the book properly means if you have recorded every transaction, every monetary exchanging activity, okay, the activity which involves monetary exchange, every transaction if you have recorded properly and maintained the books properly, these books properly, then only the books can be studied, analyzed and proper decision would be taken, and that would affect government, investors, customers, employees and researchers. Now see, I have shown here the some pictures over here, right? See, which are these pictures? One person is there and what he is doing? See, that person is recording something, right? See, what he is doing? He is recording something. How can we come to know? See, he is writing down something in a book, in a notebook we can say. He is writing down something or noting down something in the book, and later on he will take the printout of it. See, then he will take the bill. This is a small printer, and he can take the bill out of whatever he has recorded in his book, or whatever is there in the print or in the bill he can record in his books. Okay, nowadays everything is recorded later on computer, okay, using different softwares like Tally. You must have heard about Tally. Tally is also included in your syllabus. Okay, so that is later on done on in the computer. See, this, who is this person? This person is a bookkeeper. See, again there is one more example. This lady, what she is doing? See, she is recording all the things, whatever transactions she is coming across. Okay, see, there are different transactions, monetary transactions involved. There will be recording of different bills. See, calculator is also shown over here. See, she is recording all the monetary transactions somewhere in a book. Okay, that is called as bookkeeping. Now, when this bookkeeping and accountancy terminology evolved means when it arose in India, we should be very happy and proud for that, because accountants, the base of accountancy has the base in India. See, in India, during Chandragupta Maurya, do you know who is Chandragupta Maurya? Chandragupta Maurya was a king. At the times of Chandragupta Maurya's regime, his minister, his accountant or finance minister, whose name was Kautilya, okay, Chandragupta Maurya's finance minister Kautilya wrote a book named Arthashastra, where in some references can be traced regarding the way of maintaining accounting records. Afterwards, that book was called as Deshi Nama. See, now in India, what do we have after the freedom? See, we stay in a democratic country, and who is our currently finance minister? It is Nirmala Sitharaman. See, Madam Nirmala Sitharaman is a finance minister. Similarly, Kautilya was a finance minister with the regime of Chandragupta Maurya. So he wrote a book naming Arthashastra, and we can find the traces. See, everybody has agreed that Arthashastra has been evolved in India. Okay, so we can find the traces of accounting in India itself. Who has written? Kautilya has written. See, that's why it is called as Kautilya Arthashastra. And what we found here, the traces regarding the way of maintaining the records. See, Kautilya has written the way of maintaining the records, how the records can be maintained, that is written by the Kautilya, who was the finance minister, in his book Arthashastra. And later on that book was called as Deshinama. In the earlier times of civilization, later on what started? Civilization started. Accounting was done by agents who managed the properties of wealthy people. They prepared accounts periodically for the owners of property. The records of debit and credit were found in the 12th century itself. What you are going to learn in accountancy new terms, that is debit and credit. We will learn it in later on. In detail later on. That was found in 12th century. Okay. See, who were the agents? In many old Hindi films or regional films, you must have seen one person who used to work for his wealthy manager, wealthy proprietor. Okay. So what he used to do? He used to maintain the books of accounts. Right? See, that person was called as Munimji. You must have seen in the movies. See, Munimji used to prepare the accounts or manage the properties of the wealthy people. Why? These people used to give the debt to people. Okay. In Marathi, it is called as Saukars. Okay. In India, it is called as Saukars. So, Saukars used to give the debts or loan to the people because they were having lots of properties. So, one person who was called as an agent used to look after the properties of the wealthy people. They prepared accounts. They means who? Those Munimjis prepared accounts periodically for the owners of the property. For whom they prepared the accounts? For their owners, and that was prepared periodically. The records of debits and credits were found in 12th century itself. See, it was first found out by Kautilya. See, you must have seen this statue of idol Ganpati, right? What this Ganpati is doing? See, Ganpati is shown as he is writing the accounts. See, we can consider that this is a calculator, okay? And Ganpati is writing the accounts. See, Ganpati is dressed in the dress of Munimji. See, you must have seen this kind of person was shown in old movies, right? This person is called as Munimji, and this Munimji used to keep the records of his wealthy owner, and he used to sit on this desk. This was called as Munimji's desk. Okay. See, this what he used to do. See, he used to keep all the records in the books. Okay, in earlier times. And now how Munimjis are converted these days? See, Munimjis are keeping the records in the books. Okay, and these are the different books. Those are keeping the records of what? Monetary transactions. They keep the records of monetary transactions in the book, and later on those monetary transactions are recorded on the computer using different softwares. Okay, see, this is the transformation. Munimji what used to do earlier, and now what accountants are doing these days. Okay. In the year 1494, Luca de Bago Pacioli, an Italian merchant, introduced double entry bookkeeping system. What he introduced? Double entry bookkeeping system that we are going to learn in detail. Due to the industrial revolution, which you have learned in history in standard 9th and 10th. See, when it occurred, industrial revolution occurred in 18th and 19th centuries. Then what happened? Large scale operations were carried out, and joint stock companies emerged as an important form of organization which involved separation of ownership from management. Hence, to safeguard the interest of owners and investors, the business establishments required detailed information about business, which paved the way, or became the base. Paved the way means which became the base for development of comprehensive financial accounting information system. What does this mean? See, earlier owner and management was the same. In earlier times, ownership and management were the same. But with the industrial revolution which happened in 18th and 19th century, they found that there is a requirement of separating ownership from management. Okay, so the business establishments or the businesses require detailed information about business. It became the base of the financial accounting system which we are using these days. Okay, so who developed this? In the year 1494, see, this is Luca Pacioli, who is called as father of accounting. He developed the double entry system. What is meant by double entry system? We are going to learn in detail later on. He was an Italian merchant. Okay, so he introduced the concept of recording the books in double entry system. Okay, in the 20th century, the need for analysis of financial information for managerial decision making caused emergence of management accounting as a separate branch of accounting. What happened in the 20th century? See, after the industrial revolution, the different new concepts arose. One of them is the people found the need or requirement of analysis of financial information. What is the financial information? Information of which is kept of regarding the finance. For managerial decision taking, for what it was used? For taking the managerial decisions, which caused emergence of management accounting as a separate branch of accounting. So later on, separate branch of accounting was emerged. Emergence means emerged, came in existence later on, which is called as management accounting. Okay, later on, with the passing of the time. Though accounting was individual centric in initial stage of evolution of accounting, it has gradually developed into social responsibility accounting in 20th century. This is due to the vast growth in business activities as a result of development in various fields. Thus, accounting has become inevitable. What is inevitable? Which cannot be separated, which is most important in the modern world of business. That's why I'm very happy that you have selected commerce field. See, if we strengthen our accountancy side, then we will be able to fight with all of our enemies, right? See, when the industrial revolution happened, after that people understood the requirement of keeping the books of accounts properly. Okay, so they understood there is an emergence, means need of preparing the books of accounting properly, and then they came to know, see, merely keeping of the books of account is not satisfying the requirement. So what should be done? There were the different factors, those are called as stakeholders. So there are some responsibilities to the different stakeholders. See, earlier what used to happen, the person used to buy from somebody or used to produce and used to sell, and he used to get the money. So everything was confined to the organizer itself or to the businessman itself. But with the passage of time, people came to know that there are different stakeholders, there are different portions of the society who are responsible or with whom we should be responsible with the accounting, which are those stakeholders, like for example, paying the tax to the government, paying the salaries to the workers you are working in your company organization, okay, keeping the records properly. There are different stakeholders. So the accounting should be done in a proper way to satisfy the social responsibility. Okay, when it emerged in 20th century, this is due, and why this emerged? Due to the vast growth in business activities after the industrial revolution. There were vast growth in business activities. Lots of industries were installed. As a result of development in various fields, see, after in the 20th century, there was a huge development in various fields. So day by day, the scope of accounting, which was confined to the Munimji or the businessman itself, that got varying. Okay. Thus, accounting has become important or most important part which cannot be separated in the modern world of business. See, accounting means keeping the books and accounting. And which are the different stakeholders? Maybe the shareholders or investors, employees or workers, consumers or customers, and the community. Community means social people. See, these are the different, and many are there apart from that, government also. Meaning you have to, with every transaction, you have to answer. You are answerable to different stakeholders. So this concept arose in 21st century. Now, so these days, the scope of accountancy has been increased a lot. Okay, which was confined to a single owner. Now you have to answer to every social factor or every stakeholder. Now, what is meant by bookkeeping? So, let's move to meaning and definition. In simple words, the bookkeeping means recording of the business transactions in the books of accounts in a systematic way. See, you have to record the business transactions. You have to record the business transactions in the books of accounts in a systematic way. You have to record it in the systematic way. All the monetary transactions, what we are going to record, monetary transactions are recorded date wise for accurate business results. How we have to record? Date wise for the accurate business results from such records at the end of accounting year. Okay, so what is meant by bookkeeping? Bookkeeping means recording of the business transactions. What is meant by business transactions? In which monetary exchanges are involved, and where they should be recorded? They should be recorded in the books. Which books? Books of accounts. Okay, those are called as the books of accounts. The monetary transactions should be recorded in the books of accounts in a systematic way. All the monetary transactions are recorded date wise. They should be recorded chronologically or the date wise, from starting from the first day of the accounting year and ending with the last day of the accounting year. What is this accounting year? We'll see later on. Okay, but date wise the record should be maintained. Which records? Records of the monetary transactions. For what? For accurate business results. Accurate business results means we should come to know whether we are gaining the profit from this business or we are still, for example, there is some business a businessman is carrying on for years and years and he is not getting the profit in it. On the contrary, he is getting the loss, but he is not understanding it because he has not maintained the records properly. So the books of monetary transactions should be recorded date wise in the accurate business results from such records at the end of the accounting year, when we come to know that we are getting the profit or loss at the end of the accounting year, and when we come to know only if we have recorded the business transactions properly in the books of accounts. See, bookkeeping is an art or science. See, it is also called as art as well as science also, of systematic recording, classifying and summarizing the financial transactions of business for a particular period, generally 1 year. Okay, this definition you can do as a by heart. Actually, you are not required to do the by hearting of anything if you learn properly. See, bookkeeping is an art as well as it is a science. Why science? Because science, why it is called a science? Because science records, classifies and summarizes. Okay, so it is also called as a science. So you should know the art of recording. Then only you will be able to do the remaining dependent things, that is classify and summarizing of the transactions of business for a particular period, generally 1 year. See, in this picture you can see people are recording the, see, first of all, something, a peon has brought something. Okay, there is something in that envelope. After opening that envelope, whatever is that in that envelope, for example some bill, purchase bill, okay, that is recorded here manually in the books of account. Then those records are entered into the computer, right? Then the calculations are done. Okay, that is called as classifying and summarizing. The another example you can see there are different monetary transactions involved. For example, you have paid the electricity bill, you have paid the telephone bill, you have paid the salaries. Different monetary transactions are involved in the business. Okay, and you are recording it date wise. See, these are the dates. Okay, you are recording these transactions date wise. Date, then what transaction you have carried out and the amount which is involved in the transaction. Okay, this is called as recording the monetary transactions in the books of account. See, this is the book of account. This is the book of account. Okay, in which money is involved. For example, purchasing of something, raw material, or purchasing, for example, we are taking the example of a bookshop. Then purchasing of the books, stationery, notebooks, etc. Then selling the books, stationery, whatever it is. Then paying the electricity bill of that shop. Then paying the rent of that shop. Then paying the salary to the people who are working in that shop. So these are the different monetary transactions in which money is involved. So as the date is passing, with every passing date, all those monetary transactions are recorded properly in a systematic manner, starting from the first day of the accounting year to the last day of the accounting year in a proper systematic manner without missing any date. Which transactions in which money was involved. Okay, and those transactions are then recorded to the computer. Okay, these days, and different calculations, classifying and summarizing of the transactions are done. What is meant by classifying, summarizing, that we will see later on. Okay, see, there are different definitions given by different economists. Okay, first is Richard A. Stallham. The art of analyzing and recording business transactions, art of analyzing and recording business transactions, reporting results of business operations through periodic statements, and interpreting such results for purposes of effective control of future operations. See, first of all, what is the first step? You have to record, you should know the art. Okay, you should know the art of analyzing and recording business transactions. Then reporting results of business transactions. Then you have to come to the reports of those business transactions through the periodic statements and interpreting such results. Then you have to analyze and think, and you have to come to the conclusion that whether those transactions are effective for the future operations, should be carried out in the future or no. According to J.R. Batley, bookkeeping is an art of recording business dealings in a set of books. See, this is the simplest and easiest definition. Bookkeeping is an art of what? Recording business dealings. Business dealings means monetary transactions. Where? In a set of books, in different books. According to Northcott, bookkeeping is an art of recording in the books of accounts the monetary aspects of commercial or financial transactions. What is recorded is an art of recording in the books of account. What is recorded? Monetary aspects means the monetary way of every transaction of commercial or business transaction. The monetary way is recorded in the books of accounts. According to R.N. Carter, bookkeeping is the science. Why he calls it as science? Because science and art. Why? Because correctly recording in the books of accounts all those business transactions that results in transfer of money or money's wealth. What is recorded? In which there is the transaction of transferring the money. See, you pay the money to the bookkeeper and he takes the money. So there is the transfer of money or money's wealth. Whichever transactions contains monetary transactions, okay, those are recorded correctly in the books of accounts. This is an art and science. So according to R.N. Carter, it is a science as well as art, because correctly recording should be done in the books of accounts. See, because it is a set of accounts, not a single book. Correctly recording of the transaction should be done in the books of accounts. All those business transactions which involves money or money's wealth. See, again, this lady is first, she has done recording of all the monetary transactions on paper, notebook, that is called as books of accounts, and then she is telling on the computer. Okay, then she is recording it on the computer so as to interpret the different results from it. Then what are the features of bookkeeping? What is meant by features? Features means specialities. Okay, so what is the specialities of bookkeeping? See, it is the method of recording day-to-day business transactions. Okay, day-to-day business transactions must be recorded. Only financial transactions are recorded. See, what does this mean? Only financial transactions are recorded. The transactions in which financial entries are there or the exchange of money is there. For example, I went to school. There is no any financial transaction. There is no there is no exchange of money. Okay, with regard to the business. Okay, or my sister came to my home. There is no any financial transaction in this record. Okay, so only financial transactions are recorded. The transactions in which only money involved, those are recorded in a day-to-day way. See, it is the method of recording day-to-day business transactions. All records are prepared for a specific period which are useful for future references. See, those records are prepared for a specific period only. Okay? Why? Because those are useful for future references. Records of transactions are based on rules and regulations, and how this transaction should be recorded, there are some rules. Okay, so we must follow some rules and regulations for recording of the transactions. It is an art of recording business transactions scientifically also. Okay, because we have to follow some rules and regulations. So what we can conclude, see, bookkeeping is an art and science of recording day-to-day financial transactions prepared for a specific period for a future references. See, we can conclude in a single statement. If you remember the keywords hidden in these 5 statements, then it would be very easy for you to know the features of bookkeeping. Okay, characteristics of bookkeeping. Okay, characteristics of bookkeeping. How you can come to know? See, bookkeeping is a day-to-day activity of recording day-to-day business transactions in which financial transactions are recorded for a specific period which are useful for the future references by following some rules and regulations scientifically. Okay, isn't it quite easy? Yes, easy. See, what is recorded? The transactions in which only money is involved, right? Only money is involved, that is recorded in the books of accounts. Okay, now see, this person, we can call him as a bookkeeper. What he is doing? He is doing manually bookkeeping. See, even though the PC is laptop is shown in front of him, it seems to be the laptop of Apple. Then also it is written that he is doing manual bookkeeping, because see, there is a heap of receipts in front of him. Those receipts of receipts are kept on in a box. Okay, so there is lots of work pending with him, because he has to maintain different books of accounts with every different receipt, with every different financial transaction. He has to record in different books of accounts. Okay, what are those different books of account, that we will see later on. Okay, so this is also, we can call it as the work of bookkeeping. Now, what are the objectives of bookkeeping? What is meant by objective? Objective means purpose or aim. Okay, why this bookkeeping is done? What are the purposes or aims of doing this bookkeeping? Why it is required? See, the main objective of bookkeeping is to keep a complete and accurate record of all the financial transactions in a systematic, orderly and logical manner. See, why the bookkeeping is done? To keep the complete and accurate record of all the financial transactions in a systematic, orderly and logical manner. All the business transactions are to be recorded date wise. See, remember properly. All business transactions should be recorded date wise and account wise. Okay, what is date wise? Because we have to calculate for every day. And account wise means, what is meant by account here? Account means different heads. For example, if we are, as we are taking a small example of a bookkeeper, because we are considering bookkeeper is a businessman. See, there can be different accounts he would be maintaining. Why? He may be purchasing the books from one vendor. He may be purchasing stationery, notebooks. See, for example, he may be purchasing the books from w.r.t. Okay, so he has to prepare or keep one account of w.r.t, right? He may be purchasing notebooks from Navneet. He may be purchasing notebooks from Vikas. He may be purchasing notebooks from, he may be purchasing other stationery from Camel, Apsara, right? So from whoever he is purchasing the material, he has to keep the different books. That is called as, he has to keep the records account wise. See, whatever he has purchased from the Camlin company, for example, crayon wax, right? Then he has to maintain it in the books of that consumer, that dealer only, not in the books of Balbharti. Books means books of account, okay, where the transactions are recorded. So they should be recorded account wise and date wise. Bookkeeping serves a permanent record of monetary transactions of an enterprise business, and it can be produced as an evidence whenever and wherever required. See, if you have maintained the books properly, right? If you have maintained the books properly and you have recorded all the transactions, monetary transactions properly, then it can be considered as an important evidence. What is meant by evidence? Proof. Whenever and wherever required. So whenever that proof is required to be produced, you can produce this your book of account if you have maintained it properly, right? To know the profit or loss of the business during the financial year, you can come to know whether the business has gained the profit or it has gone to loss during the financial year if you have maintained the books of accounts properly. To know the total assets and liabilities of the enterprise. What is meant by assets and what is meant by liabilities, that we are going to see later on. But asset, you can consider assets are the plus size of that business. Whatever he is having, okay, what is his properties, we can see in simple words. Before going to the accounting terminologies, we can consider these are the properties of some businessman. Okay, so what are the properties and what are the liabilities? What is meant by liabilities? What he is due for the other people, okay, what he has taken from the other people, and what amount of transaction, what amount are there that he is not yet paid to the people, that is called as liabilities on his head. Okay, and assets means what? His property. So if the books of accounts are maintained properly, then we can easily come to know the assets and liabilities of the enterprise, and this is the most important thing that we have to, that comes in the analyzation. To know what the businessman owes to others. See, this is the most important term. What the businessman owes to others and what others owes to him. See, what the businessman owes to others. Owes to others means how much he has to pay to others. What are his borrowings? Okay, how much he has borrowed from the people or how much he has to pay outside to the people which he has yet not paid. That is called as owing to the others. Okay, owing to others, towards others, outsiders. And what others owe to him. See, what is meant by others owe to him? For example, he has sold on credit to somebody, then that somebody has to pay to this businessman. So this is called, those are called as others owe to him. Other people, outsider people owes to him. That is called as asset. And what he owes to others, that is called as liabilities. Okay. Simply, this is the basic concept you can remember for understanding assets and liabilities. What others owe to him, you can call them as asset, and what he owes to others, he has to pay to others, that is called as liabilities. Businessman comes to know the current year's progress over previous year and compares its financial results with the other business enterprise in similar line. See, there is some competitor of that business, okay, and this business, your business is doing very well, okay, as compared to your last year, last year, you are thinking that you are doing very well with compared to the earlier years, but you should also compare with your competitors. Okay, those competitors are called as business enterprise in the similar line. You should also compute your progress with the, or compare your progress with the other enterprises in the similar line. And when this is possible, only if you have maintained the books of accounts properly, then you can come to know whether you are achieving the profit compared to previous year, or whether you are where you are standing in this line of business. For example, you are having the bookshop, and you should compare where you are standing, what is your position, whether you are reaching to the higher levels year by year, or though your profit is more, you are not that successed compared to the other enterprises. So this can be done only if you have kept the books of accounts properly. So these are the different objectives or purposes or requirements or aims, we can call. These are the different aims of bookkeeping. Okay. See, you can analyze the different transactions, you can compare the different transactions, you can compare the growth, right? See, that's why it is shown on the graph. You can compare the growth, you can compare or analyze between different enterprises, you can compare with your last year's profit with this year profit. Okay, so different government procedures are finalized, and everything is this for the factory also. Okay, different transactions are carried on, all the transactions are recorded in a systematic manner, in a day-to-day manner. See, here we can see all the transactions are recorded in a day-to-day manner. Okay, date, then name of the transactions and amount involved in it. Okay, in a simple way. See, these are the different people who are carrying the For example, we can say this person is dictating. This person has brought some bills. Okay, this person has this one executive. We can call he's one executive. He brings some bills, and this another person assistant who is dictating the amounts in the bills, and this accountant is recording the bills in the books of accounts, first in these books and then in the computer. Okay, with this we understood what is meant by bookkeeping, what is meaning of bookkeeping, what is definition of bookkeeping, and what are the objectives of bookkeeping, and what are the features of bookkeeping. Features means characteristics. What is meant by what is hidden in that bookkeeping activity, that is called as features. Okay, the characteristics of, for example, if we can say I have a blue pen, then what are the features of that blue pen? The color is blue, it is of 5 inches. Okay, it is of Reynolds. So these are the features of that pen. Similarly, these are the different features of the bookkeeping activity that also we have seen. Okay, and we have understood also the objectives, why this bookkeeping should be done, that also we have seen in objectives. Okay, now what we will learn in our next lecture? In our next lecture, we will see the importance of bookkeeping with reference to utility of bookkeeping. Okay, we will see the utility, usefulness of, what is the usefulness of that bookkeeping. Then we will also see the difference between bookkeeping and accountancy. See, there are the two different terms. So far we have, in this lecture, we have only know bookkeeping. And what is accountancy? See, there is some distinction between bookkeeping and accountancy. And what you are learning, you are going to learn both the things, bookkeeping as well as accountancy, right? In a single subject, which is included in your syllabus, bookkeeping as well as accountancy. So there is some difference between bookkeeping and accountancy that you will learn in next lesson, next lecture. Then what is the meaning and definition of accountancy? Okay, so far you have learned the meaning and definition of bookkeeping. In this lecture, you have learned the meaning and definition of bookkeeping, features of bookkeeping, objectives of bookkeeping. But in your next lecture, you will learn the meaning and definition of accountancy. Okay, which is given on page number 3 and 4. Now, let's start with the quiz. This is your first quiz in your college life. Wish you all the best. See, always my quizzes are based on the whatever I have taught in that lecture only. Okay, so don't worry. If you find the quiz difficult to answer, then you can watch the lecture again. You can listen the lecture again. Now see, this is the quiz of day 1. What is the period of recording transactions in the bookkeeping? See, on which period, on the base of which period the transactions are recorded in bookkeeping? Is it monthly? Is it yearly? Is it day to day or weekly? You have to give the correct answer in the comments section itself. You have to write the answer. For example, you suppose the business transactions should be recorded monthly. If you think that answer is monthly, then you just have to write answer A, because the option is A for monthly. In this, you have to comment immediately as soon as you have completed watching this video. Okay. Thank you. Stay home, stay safe, take care, and don't forget to learn at home online.